You've felt it before. That violent 300 pip spike on gold that wipes out thousands of traders in seconds. One moment the entire internet is screaming, "Buy gold." You follow the herd, feeling confident. The next, the market reverses with brutal efficiency, hunting your stop loss with surgical precision before rocketing in your original direction. It's not just a bad trade, it feels personal. But have you ever stopped to ask who is engineering these moves? Who is on the other side, collecting the money you just lost? This isn't random volatility, this is the calculated work of smart money. These are the institutional giants, the banks and hedge funds that don't just trade the market, they the market. They need your orders, your liquidity to fill their own massive positions. They know how you think, where you place your stops, and they use this psychological map against you to fuel their campaigns. Today I'm pulling back the curtain on this manipulation. I'll expose the dark truth of the gold market, showing you the exact playbook the big players use to trap retail traders. But we won't stop there. I'm going to teach you how to read their intentions, anticipate their next move, and finally position yourself on their side of the trade, the winning side. So make sure you stay until the very end, because I'm not just giving you theory, I'm revealing the exact 4-hour smart money blueprint I personally use on XAUUSD. This is a step-by-step framework that once you see it, will fundamentally change the way you look at gold charts forever. Gold isn't a regular forex pair, it's a psychological asset. It moves on fear, on greed, and on manipulation. It's not driven just by technicals, but by global money flow. Every time inflation spikes or DXY strengthens, gold reacts, but not in the clean, predictable way retail traders expect. Why? Because smart money doesn't trade what's visible, they trade where liquidity hides. They look at where 90% of traders have stop losses, and that's where they'll push the market next. When everyone sees a breakout, smart money sees liquidity. When everyone sees a breakout candle, they see a trap. Notice here, gold broke above a resistance level, retail traders entered buys, then 20 minutes later, boom, it crashed 300 pips. That's not coincidence, that's engineered liquidity collection. To understand smart money, you have to forget everything you've been taught about retail trading. These aren't just individuals, they are the institutional players, the banks and market makers with enough capital to engineer the market's direction. They operate on a completely different level. They don't chase candles, they build traps. It's a calculated game of chess where every move is designed to engineer liquidity for their own entries. Their process has 3 main phases. 1. Accumulation, where price moves sideways. During this phase, they quietly build their positions, creating obvious support and resistance levels to lull traders into a false sense of security and predictable stop placement. 2. Manipulation, a sudden, aggressive push in the wrong direction. This Judas swing is designed to sweep liquidity from stop losses and trick breakout traders into entering the market on the wrong side. 3. Distribution, the real explosive move that leaves retail traders behind. With the board cleared of opposing orders, they unleash the true trend, fueled by the losses of those who were just trapped. Look at this 4-hour chart, a perfect example. Price ranged, building liquidity above the equal highs. Then, this violent wick, the manipulation, grabbed it all before the price dropped 500 pips. Retail called it a failed breakout. Smart money called it breakfast. They aren't predicting the future. They're master psychologists reacting to predictable retail emotion. Every candlestick is a story of fear or greed being exploited. They know where you'll place your stop loss and what will trigger your FOMO. Once you understand that, trading becomes a psychological game of alignment, not a technical guessing game. Here's the part nobody teaches you. Smart money doesn't just know where price will go, they know when it's ready to go. They follow a precise sequence of events that telegraphs a major move, and I'm about to lay out that exact 5-step blueprint for you. You start from the 4-hour chart. That's where institutional footprints begin, filtering out all the distracting market noise. Step 1. Identify the major trend using the 50 and 200 EMAs. This is your compass. If the 50 is above the 200, you're in a bull market and should only be looking for buys. Below, only sells. This single rule keeps you on the right side of the big money. Step 2. Wait for a fake move against the trend. This is the manipulation. A classic liquidity grab designed to sweep stop losses from retail traders and fuel the real move. Smart money needs this liquidity to fill their massive orders before reversing price. Step 3. Drop down to the 15-minute chart to pinpoint your entry. Mark the last opposite candle right before the sweep. That's your refined order block. This small zone is where the institutions have stacked their unfilled orders, creating a powerful magnet for price. Step 4. Wait for a break of structure, or BOS, in your intended direction, followed by a retest of the order block. The BOS is your confirmation, the retest is your high probability entry. Never chase the initial breakout. Step 5. Manage your risk with a fixed 2.1 ratio. A simple TP of 100 pips and SL of 50 pips is a great start. Place your stop just outside the order block. This simple math ensures your winners are always bigger than your losers, making you profitable even if you only win half your trades. But here's the catch: patience. This A+ setup might only form a few times a week. Smart money traders can wait days for it. Retail traders get bored and overtrade in minutes, feeding their capital directly to the disciplined. The market is a device for transferring money from the impatient to the patient. Before you ever place a trade, run it through this mental checklist. Is the 4-hour trend clear? Has a liquidity sweep occurred? Have I seen a break of structure and a retest? If you can't answer yes to all three, you have no trade. This is how you stop bleeding money on gold. You'll start trading with intention, not impulse. The biggest secret of smart money isn't just technicals, it's mindset. They think like predators, they let the market come to them. Retail traders think, I have to make money today. Smart money thinks I'll wait until the market gives it to me. That patience is what creates consistency. Every time you rush into a trade because you feel left out, remember that's exactly what smart money wants you to do. They feed on your FOMO, your impatience, your emotions. When you see a big spike hitting stop losses, that's not manipulation for fun. That's liquidity being taken from emotional traders. Once you master your emotions, the market starts to make sense. So, here's the truth. Gold trading isn't random, it's a well-orchestrated game between institutions and emotions. The moment you learn to read liquidity and structure instead of chasing signals, you'll start to see the patterns that the big players use daily. If you found value in this video, smash that like button, drop an emoji in the comments, and share this with another trader who's been struggling with gold. Subscribe now, because in my next video I'll break down the exact 4-hour order block strategy I use on XAUUSD, step by step, including entries, exits, and risk management. You don't want to miss